Thanks, Andrew. Hi, good afternoon, everyone. My name is Ryan. I'm a counsel with the Asset Finance Practice in Watson Farley, Singapore office. So we're very happy to be here today with this group of very distinguished panelist speakers. We will be discussing the topic on maritime finance strategies from a ship owner's perspective. And just allow me to just introduce quickly the list of speakers that we have today in the panel. So starting from my immediate right, we have Mr. Yang Lei, who is the Managing Director of Sumec Ocean Transportation. Sumec Ocean Transportation is based in Singapore. It's the core subsidiary of Sumec Group Corporation, which, as we know, is a key member of the China National Machinery Industry Corporation, otherwise known as Sinomac. Right? With specialization in the Kamsarmax and Ultramax segments, Sumec Ocean Transportation currently operates a young and modern fleet consisting of 38 vessels. Prior to Mr. Yang's current appointment in Sumec, Mr. Yang was also the head of Cargill Ocean Transportation in China, from where he also oversaw operations in the APAC region. Right. Moving on to the next speaker, that's Mr. Hatim. Mr. Hatim, who is a chartered accountant by profession, joined SPM Shipping in March 2024 and have been working since to obtain competitive financing for their chartering fleet, as well as cash buying arm. Mr. Hatim was working in India with the recycling arm of the group and was actively involved in management of finances for that company. Mr. Hatim has played pivotal roles in securing finances both within and outside India. Right. Moving on to the next speaker, that's Captain Sanjeev. Captain Sanjeev is the Managing Director of Landbridge Ship Management. Mr. Sanjeev is an astute tanker industry professional. He's a master mariner with 31 years in the shipping industry, with the last 16 years spent in different roles. His previous work experience include stints with oil majors, RightShip and Chemical Distribution Institute as a risk assessor, as well as heading the ship management of a leading ship owner in Hong Kong. Last but not least, we have Mr. Zhang Hao from Shandong Shipping Tankers. Mr. Zhang Hao is the Deputy General Manager of Shandong Shipping Tankers, which is one of the 4 core subsidiaries of Shandong Shipping Corporation. He is involved in specializing in international product, oil and crude oil transportation, chartering and operation. Together with the ships that are currently in his order book, Mr. Zhang oversees a portfolio of over 30 tankers. He has been with Shandong Shipping Tankers since its inception in 2016, and it's an understatement to say that he's been a pivotal figure in the inception and the expansion of the company, having been personally involved, I understand, with the acquisition as well as the purchase of all 30 vessels in its fleet. So without further ado, perhaps we can just proceed with the questions. And the first question I have for the panel, perhaps Mr. Yang Lei, is, as we all know, there has been an increasing squeeze in terms of the shipyard delivery slot globally, with some shipyards reporting that earliest delivery slots for ships are not available until several years later, right? So for VLCCs, delivery slots are only opening up in 2028, and for container vessels, they're not available until 2029. So, with prices, with this squeeze in the shipyard slots, squeezing vessel prices, and with vessel prices escalating at a rate faster than charter or freight rates, how does ship owners manage the risk profile that is incumbent with high vessel prices and uncertain market conditions in the future?
Thanks, Ryan. Thanks for having me, Andrew. And I think for different shipping sectors, they will have different stories, because for Sumec Ocean Transportation, we the mainstream for ship's type is the medium-sized dry bulk. I like to just take dry bulk shipping for example. And nowadays, if you look at the new building price, it's probably one of the highest for this cycle, and it's also probably the highest of the last 15 years. For me, I think it's very high, meaning that the risk is so obvious and is over there. And on the other hand, the freight market is quite weak. For example, let's take for Sumec, for example. So now it's probably below 5 digits. And let's take Handy, for example, because there will be so many container deliveries in the next 3 to 5 years. That will be a huge threat for Handy market. The only potential and promising sector is for this, is probably Capesize. There is a story of like Simondo, right? Everybody's speculating on that. But overall, I think there is no strong support from the freight market. How can you, because the freight market is the fundamental thing, who or what will support the new building price. So the second, my logic or my observation is if you look at the profit margin, the indicator, because I always listed some indicators to observe the shipping cycles, one of the most important shipping indicators is that the profit margin for this shipbuilding industry. We are owning a shipyard as well. We know it very clearly. It's probably too high or very high. And that means that there will quickly more supply enter into the new building industry, right? Because the price is the most fundamental and the most powerful things to adjust the supply and demand. If it is too profitable and the supply will definitely speed up. So that's the logic too. So overall, I think now it's not the perfect time, maybe even the wrong time for the owners to enter into their new building market. So that's for, but of course, for different owner styles, you have to calculate your own net position. If you have some the second-hand ships, you can resell it on the S&P market to cash in the huge premium, huge profit, and then you go to the new building. That probably makes sense. But for a lot of the newcomers, and if you quickly want to build up the new position, or if you want to quickly to build up a fleet at such a price, at such a timing, I think the risk is so obvious and so prominent. So the fourth point is that the energy transition is over there. It's becoming the most driving power or driving factor for the whole shipping industry, plus the geopolitics. So the risk is over there. My suggestion, at least for myself, is I would say, I would take the wait and see, and don't overdo it, and just marginally increase your fleet. So probably, yeah, that's my suggestion.
Thank you, Mr. Yang Lei. I hear just now there was a reference to energy transition as well, in considering whether to obtain financing now, whether for new builds or for second-hand vessels. And just building on that point, in terms of the lack of supply of the shipyard slots, has this affected ship owners' push for clean energy? For example, has it affected ship owners' options whether to choose to retrofit their current vessels instead of ordering new builds from the shipyards, which would be very expensive, as Mr. Yang Lei has mentioned? Perhaps I could address that question to Captain Sanjeev.
Thanks, Ryan. Definitely, I would just like to build up what my previous speaker said about the prices. When you look back the IMO strategy for decarbonization, which is one of the major things which we talk about in shipping, it is possible that we can look into the various solutions which is available in the market. The question over here is that, it's not going to be that all the vessels, new building vessels, are going to come with the alternative fuels or with the technology which can meet the IMO regulations. There will be a mix of conventional fuel vessels as well as the new technology vessels. The bigger question to a ship owner right now is that the capital which is required to do those retrofitting, I mean, to my knowledge, actually, it's not easily available because they are not ready to do the remortgage or relien on the existing technology which is going to be fitted on one of the vessels, you know. So this is always a challenge for the ship owner when they are looking into the energy saving devices and what devices is good for that their vessels, and then they look for the available capital for that project. At the end, it becomes for the ship owners that it is an investment which he has to make it. What will be the return of that investment is a calculation which the ship owner has to make it. But as the market, they are not really to help the owners to really finance that kind of projects. It is only the ship owner who has to make the decision. Of course, when you look back to the different technologies which can help into these kind of ESG and the sustainability goal for the ship owners are basically the smaller ones are there and the bigger ones are there. So it is the ship owner to decide whether how much capital he has it, what benefit he can get out of it, and then he can take up that decision, you know. So in a short, I would say that it is not so easy decision for ship owners to really look into those bigger projects like retrofitting of the engines with the alternate fuel is completely impossible. Couple of projects are running, but that is just a showcase project because you really need a lot of capital to do that thing. But a smaller project are there, and to be very frank, not enough people are there to support that kind of projects. To give you a very simple example, that silicon paint or anti-fouling paints, you know, it can very easily give you around a high single-digit fuel saving, like, you know, which is sustainable and quite good, you know. But when you look back that, say I take an example of a VLCC, and easily it's about $500,000 project, like, you know, to invest into that one. When you go back to the financiers to finance that one is not available. The only one people who can support these kind of project is the paint maker themselves, you know. So they come up with a solution and let you to invest $500,000 for next 5 years. So these are the challenges which the ship owners are facing right now, that it's not so simple that retrofitting projects can get the finance. Thanks.
I just wanted to add to it. Getting the vessel a bit modified or getting it a bit clean, the cost is very high. But considering the amount of premium, we do not get that much funds from the market. If we go with a retrofitted vessel, we might get 5 to 10% more than what we will be getting on a normal vessel. But the cost of that retrofitting is close to 30-40% of the price of the vessel. So at the end of the day, we are incurring our funds for close to 20-30%, and that is a big amount for a ship owner which has a small fleet. So that is something that is not viable at this point of time.
I think just Captain Sanjeev, just to follow up from what you say, just wanted to ask also in terms of, because you mentioned that the ship owners, you will decide which technology to invest in, and as part of that consideration, you know, what are some of the, as part of the consideration of what technology, what assets to invest in the push towards sustainability, how does the choice of the you know the financing options available to you, how to what extent does that play in terms of how important and how it changes your choice on what to invest in?
I'll just take it what Hatim says, that, like, you know, because all these solutions, when you put it down, that, like, you know, the solutions can cost probably say $50,000 to $500,000. When you look back and see that what is the return against those investment, to be very frank, go back to the charters and talk that, like, you know, you're going to emit say certain percentage lesser greenhouse gases. How does it reflect into your charter hire returns? Frankly speaking, there's none, because everybody says that this is the part of the ESG. So it's very difficult to say for a ship owner that, like, you know, what exactly you're going to invest and what would be the return. But again, it is the strategy of the ship owner that, like, you know, overall, what's your contribution is going to be there in terms of reducing the greenhouse gas emission. And sooner or later, like, you know, we all talk about the CII rating about the vessels. It is not yet started reflecting commercially, but it will happen in a year or two time. probably we'll have to wait and watch till that time how it is going to be reflecting into the commercial sense, and that will be the kind of push to the ship owner to go further and decide that those solutions, whether they would like to go and invest into that one from their own capital, or what all solutions will be available from the financial market for those solutions, which is yet to see actually, because there's no commercial implications at the moment.
Thank you. My next question, and perhaps I will direct this towards Mr. Chang Hao from Shanghai Shipping Tankers. Recently, we have seen some ship owner borrowers opting for renminbi loans from financiers with the, with the purpose of benefiting from the lower interest rate that is afforded by the China loan prime rate compared to the other interest rate benchmarks like compounded SOFR or term SOFR in USD that we see out there. Is this an option that you could see it would become more popular in terms of the choice of interest rate benchmark being the renminbi China loan prime rate?
Okay. First of all, thank you for the invitation from the Farley. And in terms of the loan interest rate and exchange rate fluctuations, ship owners, if they have the high sensitive to interest rate, and if they can also bear some risk of the RMB exchange rate, then choosing RMB loans may be a better, or we can say it's an attractive option because they can enjoy a lower LPR rate. There are several reasons to my understanding. First of all, comparative advantage of low interest are obviously because RMB rates are lower than the US dollars rate in 2024. To my data in hand, RMB 1-year LPR is now 3.1%, and the 5-year LPR is now 3.6% in 2024, while the US Federal Reserve's target interest ranges 5.5% to 5.5%. And we can see historical interest rate data from the past 20 years show that RMB rates have shown consistently low change, while the US dollars maintained the high or consistently high trend after the year of 2021. I have some data. RMB rates just dropped from 5% to 3% at the moment, while the US dollars rate if maybe upgrade from 1% to now 5%. And on the other hand, the level of internationalization of RMB is increasing, and the exchange rate is back to be more attractive in the international market. There's also some data show that in 2024, the exchange rate of RMB against the US currency is approximately 7.2. And historical RMB interest rate volatility over the last 20 years show that RMB exchange rate has risen year after year. Exchange rate is from 8.2 now dropped to maybe 6.5 or 6.9 at the moment. According to the RMB Internationalization Report 2024, overlaying the rate exchange rate managed to choose, the RMB exchange rate will be more advantageous, maybe.
When I saw your list, I feel this is a very interesting question because I see some more, including some prominent European owners is ordering ships in China, Chinese yachts. But somehow I tend to disagree with your views. I think these international owners ordering the leading Chinese state-owned shipyards in RMB is nothing to do with like exchange rate or whatever. It's probably eventually it's the story of the bargaining power, or which is decided by the supply and demand. Because for owners, our income is dollars, right? We always like to build ships in dollars. Then we hedge. We income, we cost, then with no risk, right? And second point is that ships, especially for international traded ships, they are international commodity. So right now, I don't think RMB will overtake a US dollar to be the mainstream currency in international commodity, which is impossible, right? So the reason I think these international owners, so eventually it will be decided by who is managing this exchange risk. Sometimes previously, these owners give us, we also own a shipyard, give us the dollar. Then it's the shipyards who will manage the exchange risk. But now, the owners, like C-SPAN or like the other international owners, they're giving the Chinese yards RMB. Actually, it's on their shoulder to manage the exchange risk, right? Why they have to do it? Because then probably the shipyard say, will you do it? If you do it, I'll offer you the discounted price because I want to be in the top of the paper. I want to be the pioneer in this RMB financing, right? So eventually the owner will say, sorry, I have to do it because I have no other options. I have to follow your rules. So eventually, that's why I said, all in all, it's probably the story of the bargaining power, which is decided by the supply and demand. Now, the shipyard in the stronger side, and the shipyard said, "Okay, I want you to finance in the RMB side." This is one thing. Okay, third observation. Let's take the Japanese shipyards, for example. How many ships, international ships, they built basis the Japanese yuan, right? If we consider like this financing cost, the Japanese yen probably is one of the lowest financing costs during the last 20 years. But how many ships built by the international owners was ordered in the Japanese yen? Very, very few. Even now, very, very few. So I think this is my view, right?
Yes, I just wanted to add to it. As he said, Japanese yen, it's very fluctuating. You always run the risk of the forex. So dollars is not that fluctuating, and you always have your incomes in dollars, your statements are in dollars, your entire projections are in dollars. So it gives a more better picture in terms of when you are doing it dollars. So at any point of time, you want to run a risk of hedging anything against dollar than hedging anything against a currency that is RMB or a yen, because they fluctuate at a very high rate. So at any point of time, US dollars is a safer option. The SOFR is now coming down. It is not at the 5% rate. It is coming down gradually. It has come down to almost 4.7%. And we expect for next 2 years, again, if there are Fed cuts in every quarter, it will again go down to the 3% margin. So then it will again compete with the RMB rates. So I guess down the line, borrowing in foreign currency, that is in US dollars, will always be beneficial.
If you have the shipbuilding contract, the purchase price denominated in renminbi, right? And as Mr. Yanglei and you have said, if that forex risk falls in terms of the ship owner because of a disparity in bargaining power between the ship owner and the shipyard, is hedging that currency exchange between USD and renminbi, is that the only option to mitigate risk, or what are some of the other options or strategies that ship owners can do to mitigate that risk?
So hedging is one of the options that can be done, but ultimately that depends on the mindset of the ship owners, their risk-taking capacity. We as a ship owners do not do the hedging. We like to play to the market. So for us, hedging is not an option. We keep our currencies open, and we ensure that there may be two things. There may be a high profit or there may be high risk, but we are ready to take that. But hedging is one thing that can be done to avoid that risk.
I think for first-class owners, they will not have any exposure to this exchange risk. If I was the owners, I will hedge it. Yeah, that's the only solution.
And just building up, sorry, I don't know whether Mr. Chang Hao, you have anything to add on to that management of the forex risk?
Maybe the hedging is not only the it's most commonly used method, but maybe it's the only option. The ship owners may carefully subject the exchange risk hedging instrument on the factors such as their own risk tolerance and the size of the risk and their relationship with the counterparties. Maybe we have several tools, including the natural hedging for the contract, maybe foreign exchange options and multiple currency accounts, maybe several tools to hedge our risk, maybe.
Thank you. Thank you. I think the next question I have is directed towards Mr. Hatim. I understand that as part of your work, you look towards investing in several offshore maritime assets and obtaining financing to acquire these assets. And how have this played out in the currently unstable commercial charter market?
We are a young ship growing company, so we have a fleet of 22 vessels as of now. Out of that, 40% are offshore assets. We own a fleet of offshore assets. The reason why we invest in offshore assets is that the pricing is very right at any point of time. The value of the vessels are very competitive, and the charter rates that we get in the market are close to what a container or what a tanker gets. So at any point of time, the risk capacity to the terms of charter hire is always beneficial for us. And secondly, our fleet is a very young fleet. There are no new building offshores that are coming in the market. Those that are in the market are very old, or they are near to the stage where they are required to be dismantled. So we have a growing fleet. We have a young fleet of offshores, and most of, I say 40% of the offshore assets we have, all of them are deployed. None of them have been idle. All of them have been deployed, and they have been deployed with good charter parties. So we see that offshore market will grow. There is some negative concern regarding the offshore market, because in past people have lost lots of money in offshore. But we see in this unstable market where the price of the container is not equivalent to the charter hire they are getting, we see that the price of the offshore is quite equal to what the charter market is offering. So we see that offshore is a good investment at this point of time, considering the cost of the vessel and the charter rates that we are getting.
And just building on to that, and perhaps this is a question that I open to all the panel speakers. In terms of choosing the financing, right? Whether is it financing of offshore maritime assets or any other vessel types, how do you think the attractiveness of Chinese lease financing, how has it changed over the years for you? Is it becoming a bigger part of your financing portfolio, and compared to other options such as traditional bank debt loan or bonds and alternative kinds of financing?
So when we started the business, we had finance from Japan and from local, we are based out of UAE, from UAE local banks. But we found that China is competitive in terms of offering the finance, in terms of the loan to values, in terms of the flexibility in finance. So we think China is greatly poised to be the biggest ship financing market there will be. Reason being, most of the banks have now started their leasing house. They're backing the leasing houses to lend money. They have equity that can be deployed. The loan to value where we get in a market other than China is around 50, 60, 65%, whereas in China we get an LTV of close to 75, 80%. And on the new building, if there is a proper contract with them, proper contract and proper TC contract, then the LTV can go as high as to 90%. And the rates are competitive, that the rates remain in the margin of 2% to 2.5% plus so far. So I think China is now more focused on the ship owners' perspective, because ship owners find that China will be the next area where they need to focus, and they need to look for proper financing and for competitive financing. Because of China, there has been situations where we are able to get competitive pricing from other territories also. So that is the reason that China has given a big jump in terms of getting into the business and getting the right type of finance.
we have 49 ships in the water, and we have 20 ships to be delivered. So among all these 70 ships, 9 ships we go for the syndicated loan. The rest we went for their Chinese leasing. I think the most striking feature for their Chinese leasing financing structure is their flexibility. They probably can offer not just basically like they put they joint equity, they do the equity investing, they also like this debt, they do some mezzanine. So somehow this Chinese finance leasing company is not just your financer, but also your business partner. And we bear the risk together, we enjoy the benefits together. It's very, very flexible. So I think it's for us, I think we thought that they are much, much better than this international overseas European financing. This is the traditional banks based in Singapore and Hong Kong. Yeah.
Could I also ask whether export credit agencies like Sanoshua, CXIM, and their involvement in providing credit insurance for these loans, is that something that you look out for as well? And if so, then does it play a significant factor in terms of what are the financing options you go to, and also what are the choice of shipyards that you go to in terms of which jurisdictions are covered by these export credit agencies?
We do have 4 ships financed by their very, very leading European banks, but insured by the Sanoshua. So the fact is that for this scheme, it's always a trade-off between the cost and the effect. If the cost of this from Sanoshua is low, of course it's much better because you can enjoy a much low interest rate from their banks. But it's very high, and your own credit is also solid enough. What's the point? So the conclusion that, think about it carefully, and it's always a trade-off between the cost and what you can get, result. So it's pretty simple, right?
I think the last question that I have, which I also open up to all the different panel speakers, is just me going back to sustainability that we spoke about previously. Do you think in terms of sustainability-linked financings, will this be more popular over time? Or do you think that they will not be so popular or effective, given that it only affects the size of the interest margin, and it does not really have a very massive detrimental impact, even if the borrowers do not fulfill the sustainability KPIs?
As Captain mentioned in the starting, that the ESG is something that we have to look forward to. It's something we are trying to avoid, but we shouldn't, because in next 2 years or 3 years it is going to be a compulsory thing to be done, and it's our responsibility as a ship owners to ensure that we comply with the ESG compliance. We ensure that proper compliances are in place. And so in terms of financing, there is not so much encouragement as of now, because in terms if we get the vessels ESG compliant or not, there is not a difference in the ratios of the loans that we are getting. But down the line, when that becomes an imperative thing to be done, it becomes a compulsory thing to be done, then I think the leasing houses will have this set of conditions where if there is an ESG compliant vessel, then there might be a situation where we might get a higher LTV, or we might get some benefits in the margin. But as of now, the situation remains same, whether it is a ESG compliant proper vessel or there are some emissions. But the policy as of now has not changed, but in future if it becomes a compulsion, I think there will be a change in the policies.
Just to add on what Hatim is saying, is definitely depends on the company's strategy, what way you wanted to look into that one. But I think next 2 years we need to really watch out. The very immediately in front of us is the EU ETS actually, which is going to tax all your emissions. And after that, probably next year, sometime in 25 or 2026, the IMO will come out with their own strategy. when that thing happens, then most of the company has to change their strategy, that how they wanted to go for the financing, because that is where they will have to show to not to the authorities, but also to their own investors that what they have been actually doing in terms of those sustainability stuff. So it is all driven by the market, but I think we are very close to what we would be seeing now, that there will be a change in the way we go for the financing.
Thank you.
So the essence of your question is that the sustainability of the ESG financing. Of course, the owners will welcome more ESG financing, of course, right? Because it's cheaper. But the question and challenge is that will the banks, will the leasing companies are willing to provide more ESG financing? The answer is unfortunately no, because they cannot make money from the ESG financing. Let's take the BlackRock, for example. They used to be the leader in the ESG financing. But last 2 years, they cut the portfolio in this ESG financing. Why? Because Larry, the CEO of the BlackRock, is a pioneer in this green financing, green transition. Why? Because the investor said, hey, Larry, you need to stop it because you're losing money in your ESG portfolio. The same story happened in shipping. Think about it. How many banks are willing to, make less money compared with your competitors just because I'm financing the green ships? Is the green ships making money or really profitable? So eventually, all in all, the sustainability of the ESG financing or whatever will come from the revolution or in technology in this. Anyway, eventually, if the green shipping or the transition in the shipping will be profitable, be successful, then ESG financing will be more welcome, more prevailing. Otherwise, I don't think it's realistic or whatever. Think about it. The Poseidon Principle has been launched many, many years ago. But are they really doing some things? Or are they really influential among all these banks? Or are they the Western banks really following the principles or figures or data they promised? No. So I used to be a trader. I said, okay, let's face the reality. Let's be an animal of economic calculation. Everybody is a commercial organization. Eventually, you have to make money. You have to be profitable, right? And all this green transition, all this decarbonization, somehow is a public goods. Leave the government to bear the cost of the public goods. And we are commercial organizations. We have to make money. We made every decision following the principle whether this business is profitable or not.
Thank you. I think the time is up for our panel discussion. So unless there are any questions from the floor, I would like to thank the speakers that we have this afternoon. Are there any questions from the floor, please? Thank you, everyone. Thank you.